Hi, I'm Michael, and for this week's accounting class, I have chosen the topic of recording transactions. The importance of recording transaction is the first step in the accounting process. In this process, we help determine what accounts are affected by each transaction. And by using the recording transaction process, we are able to adhere to the faithful representation concept by accepting only original source documents. When we look at recording transactions, we must first look at obtaining a source document, such as a purchase invoice, a bank check, or sales invoices. These three items are key in the process to make sure that we are actually obtaining information from valid sources. Once we have obtained information from a valid source, we determine what type of account is being affected, and how to determine that, we look at the source document. The step 2 is to determine if this is either a debit or credit, and then the third step in the process is to record the transaction. When we consider the application of record transactions at the entry level in the professional atmosphere, we can look at a restaurant. Say an employee is asked to pick up toilet tissue on their way to work because their employer is out of this item. To make sure that the employee knows that they need a receipt for reimbursement, their boss needs to tell them this ahead of time. That way they have the correct documentation for reimbursement, and so that record transactions can be kept and accounted for. The next step in the real-world use of record transactions is the mid-level professional. For this, I continue to use the use of a restaurant atmosphere. Considering the general manager is mid-level, when they create a P&L, they must accurately have purchase orders to refer to make sure that they're recording the transactions properly so that the real-world results can be obtained. If the general manager does not understand the importance of correctly reporting line items from purchase orders in their P&L, they do not understand the real-world concept of reporting transactions, which is a key part of accounting, and they must therefore properly report from their purchase orders to their P&L. The final part of the application of the real use of record keeping can also be looked at the executive level, which would be a supervisor of multiple restaurants. When a supervisor of multiple restaurants has to turn in profits or losses for all the stores, he must accurately obtain the correct profit and loss from each store to add to his report, because without accurate reporting at the executive level, the company cannot determine if it is properly running each store. If he does not turn in proper profit and loss report numbers, his stores may fail and he may lose his job. So therefore, an executive must understand that if he modifies his reportings, his stores could fail because he does not accurately show that one store is failing while the others are succeeding. The final step in importance is ethics. One example for this is denoted when we look at Proverbs 27 verses 23 through 24. To know your flocks, you must know your riches. While if we falsely report our riches, we don't know our flocks because we don't know what we are obtaining. And then when we pass that information on to our clients, they falsely invest in us and we steal their money, and eventually our company collapses. To ethically report, we must use source documentation in our reporting. By obtaining only information from source documents, we ethically create the right path to accounting for our business.